Welcome to the Foundation for the Study of Cycle. I'm Lars. I welcome you to another episode of Cycles TV. Once a week, each Monday, we meet here to analyze some cycles. Today, what's on the agenda? First, I want to do a review and a preview on oil cycles. I will start with the analysis we did back in February, where we already saw a big increase in oil price. We analyzed oil and we made a projection back in February. Let's revisit this projection, and for sure, as oil is an important asset in the energy environment right now, let's see where we are in the cycles today with oil. That's the first topic on the agenda for today. And second, that's what I promised last week, Monday. Last week, I reviewed palladium, and there was the request out of the community also to review platinum. So I will do this today as it was requested by you. That's the purpose of the live session. I can answer your comments and questions. So therefore, feel free to drop in your notes in the chat area down below, on the left or right, wherever it is on the screen, while I will now go through the planned topics. So let's get into it. We start with a short review on oil cycles. So we go into our chart application. Yeah, that's the session we did here on the channel live back in February. So I would invite everyone. I think I've linked the video down below in the description. There's a 5-minute section which you should review. I discussed the oil cycles and made the projection, and what you're seeing here, just to see where we are coming from, is in February. I'm not sure, here in February, where we did this. The projection we made that we would expect the cycles to continue into the period what you see on the screen. It was May, June. So this was the dominant long-term cycle, the daily cycle we reviewed back in that session. We know where we are. We really saw it looks like we really saw the peak here in June. So let's review where we are. I think it was a great forecast. So let's switch to our cycle charts here. So that's the projection, just starting with where we are. So the dark blue, if you're new to the channel here, the dark blue on the chart is the in-sample data, so the price data we used for the analysis, the cycle detection. The light blue, what you see here on the screen, is price which is out of sample, so which was in that case here not used, so we can go back in time and see how the cycle projections worked. That's what we did here. So let's zoom in. Here that was the point in time, 21st February, where we did the projection for oil. We still had the quite up run since the year of 2020 into that area. And we asked the question, is this year the end? And as you can see from the projection, and please review the 5 minutes I've just linked in this description here down below. At this point, we stated that we should see a continuation of the upswing here, which is exactly what was seen here. So at this point in time, it looks like we have been in the middle of the cycle. So there was room to the upside from a timing perspective, not from price projection, but from a timing perspective. And that's what we said at that point in time. We need to recheck these cycles around April, June, where we from February expect the cycle to top. So now let's zoom in and see where we are in that projection right now. So if we just zoom in with past data, we can, from a very interesting point of view, so where we are now. So it looks like it really peaked at the projected window we discussed here on this channel, live for free, just for education. So that's very interesting. So that's also a reason I started with this analysis, just to give you an idea. If you want to dig in, please go back to that analysis and learn how and why these cycles have been selected, because there's a clear procedure we are following every week for our cycle analysis. There's no black box in my brain or in my local computer which is telling me something. This is the tool set we are using and following the standard procedure. So now I will jump into today's situation and update the cycle. So therefore I will reset the range, which I've just done now. You see everything is now dark blue, which means we are using all data we have for the cycle analysis. Right now, I have a very long range of data in our data set for the current analysis. You will see this here down below. So the in-sample start is from 2015 to today's day, which means we have 1,800 bars, which is a very long period here for the analysis. And just to comment, there's often the question out of the community why the cycles which you see here in the table view might be different on your end if you repeat this procedure. And one key aspect is why you might see different results for cycles which have been detected is the reason the concrete time range, start and end point for the analysis you use on your local machine. So, and that might then give you different cycles, because there's a principle of variation on cycles. So there's never a static cycle length over the whole time. It just depends on the amount of data you input in the cycle scanner, which can finally result in different cycle length output here. However, that's not a key issue, because if we do a projection, we are interested in the current data set. So if you're following this channel, you know that I would assume this is too much data for our analysis overall. But let's start with a long-term view. So therefore, as always, the first step in our cycle analysis, we have to look at the spectrum of this data set. So before we go into details of this data here, let's see what the spectrum tells us on this data set. That's the spectrum now we see here on the bottom of our analysis, and we are looking for peaks in the spectrum, because the peak in a spectrum shows us there's the valid dominant cycle. So if we browse over the list of peaks, we have one long-term cycle which is showing up with a length of 372 days, which is clearly showing up. And it's interesting here because this is a similar cycle which we already saw back in February. So and that's another important aspect you have to keep in mind. And I repeat this here on the channel every week, from week to week. You need to understand the rhythm, the cyclic behavior of the data set you have analyzed also in the past. So never jump to a new asset. Just ramp up the cycle scanner and follow blindly the cycles. You need to have in mind if a cycle, for example, just if a cycle is stable. So if you have seen the cycle length here, which is shown here with a length of 372 days, very often in your analysis during the last months and weeks, it gives you, or it supports you, that this is a valid cycle to use in the analysis, because it's detected very often. If sometimes there might just pop up a cycle in the scanner or in the analysis, which should make you curious about if this is a valid cycle, if it has not shown up before in your analysis. So therefore I just repeated on the current data, the 370 something. I think it was 360 something in February. So it looks like the cycle is still there. By the way, this cycle projected the top in June. So that's the first one we should use in our projection. And the second one I would recommend to use is a clear peak with a length of 175 days here, which is listed in the spectrum. The other cycles, there are a lot of cycles in regards to amplitude, Bartle's score and strength, which are not clearly separated. So there are too much then in the lower range and in the short range here. So these two cycles are the ones you would pick, this one here and this one, because of the clear separation in the spectrum. To the left, to the right, and then you could throw in a threshold level somewhere here. There are just two peaks in the spectrum above this line, and then all other ones are blue, red, or have colors we are not interested in. So that's the procedure we are always using to follow. So let's now move up to our chart, to our list, and use exactly these cycles for moving forward. Okay, so the chart in our list here. So I've talked about 2 cycles. The first one is showing up here with a length of 372 days. I will activate this cycle here. This is what the cycle looks like. And you might remember, I told you this cycle already showed up here back in February. And please watch the video linked below. So the top we see here from this cycle is now nothing which pops up after the fact, because you could argue, okay, now oil has gone back from 120 to 100, so 20% off. So it's easy to detect now a topping cycle here. This cycle top was projected for us back in February. So this is just the confirmation that the projection we did back in February, so now it seems like a longer term cycle is in for oil, which we did in February. We now update this in the period of April, June. We see the same cycle lengths, similar phase, might change, but this cycle has not changed for the last 3 months. And we see now a peak in oil. So this is, and we've seen in the spectrum that this is still the most dominant cycle to follow in the term of moving forward. The second one was the length of 175. When I add a second or third cycle to the composite, which we are using here then for our projection into the future, the first thing I look at, if I switch it on and off, so I just click on, off, and want to see from a visual perspective if the main projection in regards to the next top and the next low do change dramatically or do not change dramatically. So let's do this together here. Right now, both cycles are activated. So the most one was the 372, so I will keep this one activated, and I will now deselect the 175 and reselect it. And just have a look at how the composite is changing if I just add it or deselect it. And what I want you to follow is the top projection, because we are looking, if we use these composite cycle projection, we are looking for timing points. So when do we expect a major change in trend? We don't know the absolute price movement to the downside or upside based on the cycle analysis we do, but we are looking for points in time when to expect these changes. So the first topic here, which you can see, is that the topping window, which is somewhere here, just marking this, will not change dramatically, even though if I have 1 or 2 cycles in our composite mix here, which is good. It even makes the composite more clearly peaking. So we don't. So the only, if we just use the one cycle, it is a clear peak, and adding the other one won't change the overall time window, but would make it sharper, but not alter it. And this is a confirmation, or another confirmation here, that it looks like oil has peaked exactly in the projected window we showed you here in February. So what will change if you have a look even more into the future is then the low projection, which is either here in February, or if I deselect the shorter cycle here, even further away in the future. But that's not the most important thing here. What we take away from this analysis, latest in September, because that's the earliest point when oil might bottom or form a local bottom. It's not said that this will be overall tops or lows in the absolute range, but in the local amount, this might be then another local low here, earliest September. So we have time to move forward now, and we don't care if the low is coming or another low is projected somewhere in the future. We will update our analysis. Yeah, for me personally, I will do it by end of August, somewhere there. So the current projection using this very long time frame of analysis for 7 years of daily data shows us oil has peaked, and the summer, so the next 2 to 3 months, should see decreasing oil prices if we follow cycle analysis. Keep in mind, this is education. We just do cycle analysis, so there's for sure no guarantee or whatsoever that the market will react to the cycles. So before you take any decision on your own in regards to your financial decision making, take into account other indicators, take into account your personal risk management. This is only education. This is no advice or recommendation. Okay, said that. I mean, it's clear, but at least for the rules to follow here. So finally, I need to add another topic here, because if you remember in the beginning, I told you that we have a very long range used here with over 1,800 baht. It's okay. It's really okay to start with 7 years of data. But also, if you follow this channel, you know that for me, it's too much data to now fine-tune the current situation. Because, and therefore, I've often said that, but also let's repeat it here for you. We are not doing statistics here on 20 years of daily data, what average cycles have been in oil or whatever data set. We are interested in the current situation, so the current status of cycles in this data set, and the near future. Therefore, we don't need long-term historical data. I would say we don't need to go back more than 3 to 4 years if we are on a daily time frame. And we are anyhow not going more into the future than the next 2 to 3 or 4 months. So using 7 years of data gives you a kind of clue on which cycles on average on the past 7 years have been active and are still active. But if you want to now fine-tune the timing, you should exclude lots of data from the long-term past. That's important on cycle analysis, because cycles are not static. There's the principle of variation. The principle of variation means the cycle length will alter. It will not dramatically change, but it will change from 372, which we have seen here, to 360 days, which is slightly altering. In addition, the phase, where we are in this cycle, might alter and change, and the amplitude. So all these 3 parameters, which define a cycle, slightly change over time. Slightly, not dramatically, slightly. But therefore, what do you use the information for if the average cycle length over the past 50 years was 310 or whatever? It doesn't matter if the current cycle length is 340 days. If you then use only the average from the past 20 years, it will give you a wrong forecast on the right-hand side of the chart. So it's good if you are diving into statistics, if you want to get a clue on what's the average cycle length for active cycles in this data, but be careful with using long-term cycle analysis results for the current forecast you're doing. That's often a mistake made. Cycles are dynamic. I can't repeat this often enough, because I think that's a common misunderstanding and wrong usage of cycles in current data sets. And that's also why often you hear about nominal cycle lengths or nominal cycle models. The nominal in this phrasing stands for the average cycle in the past. But you don't use the nominal cycle in a nominal model for forecasting. You need to understand what's the current cycle length. And the technique we provide here at the foundation is one way to detect the current cycle length if you do not use too much data. But okay, I stop here. I hope you got the point. So therefore, let's get back to the chart and let's see this in practice. So therefore, instead, I will clean it up first. Instead of using these 7 years of data you see here on the chart, I will now change the starting point and bring the starting point more near to, let's say, maybe this top here in 2018, and update the analysis, which gives us, if we zoom in, you see the results here. So this gives us around 1,000 bars, 1,000 days, and we start now from 2018 to today. So I have reduced the amount of data we use for our cycle analysis. And I explained just before why I'm doing that, so I will not repeat this again. If you are asking, Lars, what's the procedure to pick the correct starting point in the past for your analysis? And there are two important topics you need to have in mind if you want to pick the best starting point in the past for your data. The first one is, and I've often talked about the first point to select the right starting point, is use approximately a factor of 3 on the longest cycle you want to be able to detect. So in the cycle scanner uses, the longest is around 350, which we are detecting here if we are using daily data. Multiply this by a factor of 3 and you will arrive at around 900 data points. Depends on your time frame. So if we are dealing with daily cycles, 900 days of data. This is enough information we need to detect a cycle with a length of 350, 360 days. Yeah, multiplied by 3 means we have, or we could have 3 full repetitions of this cycle in our data. And that's what we need to reliably detect if a cycle is there right now. We must have at least 3 repetitions. So if we have more than 3, we could for sure still detect the cycle. But the principle of variation is just averaged. And that's now what we don't want to do. So therefore, we use the minimum amount. So therefore, that's the first reasoning, factor of 3. The second important point, and that's what I added here into the mix, if you have a look at the chart, is then in this range, so you don't need to be exact here mathematically. So the possible range, if you go into the past, could be somewhere here, because that's the distance from here to here. I've not counted it with, that's somewhere here. These are 1,000 bars somewhere here and here. And once you have this frame, then pick an important top or bottom here in this area to set the starting point. So this could be maybe here, here, or here. And I think here's a clear top in this data set. So that's the reason I've chosen this point in time here. Yeah, so here as the starting point for our analysis, which gives us these 1,000 bars for the analysis. And that's the standard procedure you can always use to select your individual starting point. So this is the best setting where we still have enough, but not too much data for our analysis, right? Okay, so that's the explanation why I would recommend to shorten it to that point. Let's get back to the spectrum to see where we are. We have first one clear peak. I think it's clear now where the peak is, which is 164 days. And you can see that the longer term peak, which if we have used more data in the previous analysis, was 370 something, now disappeared, or it looks like the cycle is extending the length. This is also what you can conclude now. If we shorten the period, it looks like in the current situation, so from the principle of variation, the cycle length has extended in the area of 400, and we are not able now to detect cycles above 400 here. So It looks like it's still there around the length of 400. That's the 372 day cycle we used if we used more data points. So we couldn't use it here, but we can use this cycle, which is shown here. So let's use the cycle with the length of 164, which is interesting here. Let's comment on that. So the key reading here is what we're looking for is always the next important turning point, which seems to be here. So the period late July, beginning of August, here is the expected local low. And that's in alignment with the analysis we did before. I mean, that's the earliest point we have seen also on the shorter term cycle used if we have used more data. So now that's what I like to see. I like to see different ways of analysis coming to more or less the same conclusion here, right? So the same conclusion here means that the earliest, so for example, all analysis confirm now a top has been in and we are in the downswing regardless of which cycle or which time frame we used here for our analysis, which will extend into, let's say August, earliest point in time where the cycles could bottom for oil. So that's the point. And we don't know if this will be the exact top, the exact bottom. That's why we update this analysis every day, every week. So you should not wait silently. At least if you are following cycles, you should do this regularly. But I think you got the point here, what the current forecast on oil is and why I'm using these different forms of analysis here, and said that there is no other cycle to pick from the spectrum here, right? And the good way is this is a clean peak in the spectrum. It's sharp. It's not flat. It's sharp. It's green. Good Bartle score. The triangle is very, very large. So we have a good strength of the cycle. So all parameters fit to use this cycle, which I will not talk about the energy, but you see here the cycle energy from the cycle really is ending end of June, and positive energy is kicking in by end of July here. So that's the point in time. So for the next 4 weeks, I think all cycles are in alignment, pointing in one clear direction with oil. So I hope you're still here. It's a long analysis on oil, but I think hopefully there has been a lot in, and I tried always here in this session. That's why we are here weekly. This is not a market forecast. This is about learning how to do cycle analysis. And that's the main reason I hope you join this session, so you could learn something. However, you know what I'm doing here. I want to use live data and I want to look into the future. So we can learn from good analysis and we could also learn from failures. I don't mind doing wrong projections here. Of course, it's kind of learning. I mean, in case of oil, again, it was spot on. I don't know what the future will bring. So let's review all cycles in August. Next time you have a clear picture. So second topic from the agenda point now, platinum. There was a request last week, so therefore I promised to do this in this session here. Let's switch to the platinum chart. And let's just do a standard cycle analysis on platinum right now. So let me just cross check here. Boom, boom, boom. Do I have the right chart? Yes, I have the right chart. So that's how platinum looks like on the daily time frame, going back into the year of 2018. Coming from 1,300 down to 900 with a low here of 600. So quite a large range here also in platinum. The peak was already early in February, still coming down here. So I'm not an expert of this asset class. I'm just a cycle analyst, so I really don't know what's going on here in this asset class. No clue at all. Just doing now pure cycle analysis. So first step, let's have a look at the spectrum. The spectrum looks like this here. So, boom, boom, boom. Yeah, we have a peak, but not a picture perfect peak. I will explain you why. I mean, it's clear the most prominent peak we can see here in the spectrum is showing up here, yeah, which is 200 something from the length. It's green. It's good battle score, and it's also a large triangle, which means we have good strength on this cycle here. What's not showing up so good here is that it's not a sharp peak as for example it would be here. This is a very sharp peak with separation to the left and the right, and a very sharp peaking top here. This is a plateau. Yeah, it's a plateauing peak with a very long range. If you just think about where the peak in this plateau is, and that's important to understand from a mathematical point of view, for sure. You will analyze, or the mathematical table will show you, hey, the peak is here, exactly here, 200 days, there is no other peak. Lars, what are you looking for? Ha! Yeah, that's the digital algorithm which will tell you there is a clear peak. But if you understand a little bit the way how the spectrum works and the principle of variation of cycles, you should be aware that from a mathematical point it's correct, but maybe the peak is here, or if you do different analysis now with different start and end dates, this could alter, which will make any projection very unstable if you use peaks from flat or plateauing peaks out of the spectrum. So for sure, we will use this cycle information now, but you have an additional information that the quality of this cycle for projection is not as high in the cycles I showed you, for example, before on oil. So I don't have a mathematical score right now to bring this into the algorithm. So therefore, it's always important to have a visual reference of these peaks in the spectrum. So, and this is a good example to just repeat on that information. So then I would not use these two peaks here because you see the triangle is red, so we have bad statistical data here. We could use this here. It looks like there's also a longer term cycle somewhere here in this window, but we should switch to weekly data series to detect this longer term cycle. So that's also a question. So why can't we detect longer term cycles? You can, but you then should switch to weekly series, not daily series. So enough talking. Let's use this cycle. Let's use this cycle here now. So we have the length of 202 days and the length of 132 days. So that's the result of the visual inspection of the spectrum. So we move up. We start with the longer term cycle 202, which is this cycle here. And then we will add the second cycle here. First, what I always recommend is here, I think you know about this, check the rhythm of the cycle against the raw data. So this is what I often do, connect the tops and the bottoms of the cycle and just try to connect then the behavior of the raw data in regards to the main turning points here, the low and top here. So if you connect then the raw data against the timing points here, I think you clearly will be able to see that the rhythm of the timing cycle here is quite on. But that's good. That's the second information. I don't have a mathematical score yet at hand for you. So therefore, the correlation of timing, it's not the correlation of the cycle with price. So therefore, there is a correlation score, but we are looking for a correlation of timing points in regards to change of trend. So it's more correlation of a zigzag and not absolute price movements. So therefore, I'm doing the second visual inspection here, price changes in trends against cycle changes in trends in regards to the timing. Looks good. So therefore, the cycle with a length of 202 days could be used. As said, it's a plateauing cycle, so it's not the best cycle to follow. And then the second we could add here is the second shorter one, 132. Again, you see what I'm doing here? I'm just switching it on and off, to see if there are major changes here. And what you see there are lots of points in time which do not change at all. Yeah, I think you can spot them on. So one is here. For example, this. No, that's wrong. So it's here and here. So ignore it. So I think you could add it. It's not altering the forecast completely. It's changing it completely. It's just more fine tuning it. So let's now move to where we are in this cycle here. So, okay, that's the current situation on platinum. We could make it larger. That's the outlook. I think it's speaking for itself, and it's in alignment with the projection and the results we have seen on palladium last week. So if you have not followed last week I did this special subject on palladium because there are more reasons to do that. But we had the same outlook. So it looks like we have a current bottoming cycle in platinum, which might give us a bright outlook for this asset, which is in alignment with palladium. So interesting. Okay, very interesting. Yeah, we are running 40 minutes. I hope you're still here with me. I hope you got something out of these two current data sets, which gives you current market situation, education, just looking on cycles. Actual price movement will depend on lots of other factors. So let's just use some time to get through your questions in the chat, if you would like to. So that's the reason I hope you're here. At least I will have it cross-check here. James, question, a suggestion, request. Please, can you add the market's name symbol in the title of the chart, so that when we save, make a screenshot, this is included? Yes, and to be honest, there's already a beta pilot, a new user interface in the making, which is already working in a pilot environment, and for sure there it's in. So yes, James, you will get the name directly on the chart, which will make it easy. It's already there. We have not rolled out the pilot yet. I need to finalize a little bit because there are more changes in the user interface. So you will like it for sure. Dale. I pay attention to the R2 as I'm testing various significant cycle lengths. What's the R2? Dale, please, if you have time and are still here, if you could give me an idea of what you're meaning with the R2. Just update. I can follow up if you just give me some more information in the live chat. Tony, thanks for the oil and this well explained how you focus on most. Yeah, thanks. So then the message has come through the air, through the line, through the ether, whatever this is. That was the purpose of today. Thanks, Tony, for following and this. Yeah. In regards to time, I see for sure you're interested in crypto and Bitcoin, but in regards to time, I will not do a short one here in 2 or 3 minutes. I can I think we discussed a lot of energy and commodities right now, the current markets analysis there. So let's do crypto next week. So please join next week, Monday. Yes, I'm here on Monday, so it will be a live session, and we can analyze Bitcoin and crypto next week here together. Correlation coefficient. Okay, Dale, that's what you're referring to. Should I pay attention to the R2? So the two correlation coefficients. Okay, let's switch back to the chart and explain. And you can then update your question in the chat while I'm doing this live here, Dale. So there are two coefficients which are already shown here on the chart. The first one is the full in-sample range. So the full in-sample range is the full data set here. So the first value gives you the information about the composite correlation against the raw price and the overall range here, so the overall dark blue. The second score then gives you the correlation just in the visual area. So if you zoom in here, for example, you will see that the correlation changes just in regards to the current scene data. So you see this, and if the value is above 0.5, it will become green, because everything above 0.5 is a very good correlation. The maximum value is 1, the lowest is 0. Everything around 0.5 is okay, but everything below 0.5 is shown here as amber. So the overall correlation is around 0.5, which is okay, but not as good. And if we zoom into the range of October to the beginning of 2022, it's getting green. So that means that these two cycles have a very high correlation in this time frame in regards to the current market behavior. That's the reading of these two correlation coefficients which show up. As said, the overall correlation is not as good to follow because it uses all data, and the correlation is also influenced by the large amplitude swings of the theoretical composite, and here the very low absolute price change of the raw data, because this might give you a bad overall correlation score. However, if we don't take the amplitude for the correlation into account, this is a very good situation, because the top is timing wise exactly at the projected point, and even the low here. But the difference in the distance between the amplitude swings here from here to here are very bad. So what we are looking for from a timing, perfect. For the calculation of the correlation score, it's not good, because we have too much distance between the peaks. So that's why often don't use the overall correlation score, or at least you need to understand it, what I'm explaining here. You get a different picture if you zoom in. So because and that's what we can do here. So if we zoom in more closely into the given period, you see that the distance also will be averaged here, and just zooming in where the distance did not look good up in the overall picture. Now here it looks better, and it gets above 0.5. So at least, Dale, I think you know that's just the basic explanation. And your question, getting back now to your question, to if you're testing various significant cycle length, I would recommend zoom into smaller chunks of data. Don't use the overall data set, so don't use the left-hand value here. If you zoom into chunks of period and then cross-check the right-hand correlation, how this shows up here, this gives you more or a value which you could use, and then make clusters or chunks of the data you're analyzing and zoom into different periods. And if in the zoom the correlation gets green, then it's good. Then it's a confirmation. Maybe I should remove the overall correlation because it's misleading. But Dale, I hope this helps you a little bit in using the correlation score for your individual analysis. Okay? Good. Yeah, so Florian, is there a relation between oil and the stock market? That's a tough question. To be honest, I can't give you an answer here just on short note. The correlation might be on and off. And I think the way to do is we need to bring in now the current dominant cycles on the stock market, which I've not done yet. And in regards of time, we need to take 20 minutes now on the stock market to see the cycles. And if these cycles then are in alignment with the current cycles in oil, then there might be a current in sync, but for sure that's not an explanation, or the reasoning is not given by cycles. We just can see it if it's there. And therefore it's too much to do now. But maybe to follow up on oil, it's an interesting question I would follow here on the channel. So please come back. I will keep this question into mind. Next time we analyze oil, I will bring in the general question of if there's a cyclic correlation. Yeah. Okay. So I think if you just joined and don't know which cycle it is, please just use the replay, as I want to close our weekly cycle. And Hassan, as the oil cycle, it is time for bearish, right? Yes, that's the takeaway. But again, this is education on cycle analysis. This is not a market forecast. This is not a newsletter. This is not any recommendation on your personal financial decision making. Okay, so let's close the session for today. Cryptocurrency next week. It's too much time today. I can't stream continuously. So we have crossed now the time frame. So maybe as a last question, James, your question, how can you confirm what is the best way to get in touch with you? Some questions regarding also other use cases or tools I can offer, and the API technology we have. Reach out to me via email. I know it's hard to get an answer because my inbox is crashing, but James, I will put you on a filter now in my email inbox as you're here live, as you bring up the question. That's always the time I want to focus on the people which are engaging. So the best way to everyone is engage with me here in the weekly channel, independent from where you're coming from or which special subject you're interested, foundation or other topics. I will take what the questions here into my personal filtering and prioritization. So therefore engage with me here. James, you are now here saved. Okay. That's the bonus for being live on the show. So let's close it for today. Have a nice week. We have Monday, so there are some times to continue through the weeks. I hope you learned something out of this session. See you in a week. Bye.